Good evening, everybody. I hope everybody's doing great. I am Mark Sebastian. I am the founder and CEO of OptionPit.com. I'd like to welcome everybody here. It's good to see everybody. Let me know where you're coming in from. Are you coming in from Tuscaloosa? Are you coming in from Tacoma? Are you coming in from Saskatchewan? Are you coming in from the Sierra Nevadas? Let me know. It's great to see everybody here. We're going to have Andrew and Hannah here in just a second. Andrew, for those of you that are unaware, is our head director of education, head of trading, and Hannah is our director of new product development. Her job is to make sure our product is good. Our job is to come up with great trading strategies. It's something Andrew has done repeatedly, and you're going to learn about tonight. And you're going to see really as Andrew walks through things. One, how does a professional trader really think? How does a professional trader really trade? And you're going to learn a couple of tricks in the trade. It's going to be worth your time. So Hannah's job is then to implement something we call CRT. Is the strategy consistently profitable? Is it repeatable? And is it teachable? If it's not one of the, if it doesn't have all three of those, then it's no good. What? No, I'm in the middle of a presentation, buddy. No, we're going to eat dinner. You know, he knows not to come in here when I'm talking. Kids, though. Anyway, so Hannah, CRT. Consistently profitable, repeatable, and teachable. If it doesn't hit all three of those, then, if it's 1 and 3, that's one thing. That's consistently profitable and teachable. That can end up in special situations. But if it doesn't have the profitability, it's never going to see the light of day. And if we can't teach it to you, it's never going to see the light of day. So CRT is really the foundation of everything we do here at Option Pit. We want you to be in strategies that make money, that you can learn to do yourself and apply in other places, and that show up consistently. So that is what we're about here at Option Pit. I think we're the only group out there that really applies this type of standard. And our traders do our absolute best to live up to those standards. And again, if it doesn't, it eventually goes away or it doesn't see the light of day. So now let's talk a little bit about the events that have been happening. Obviously, the market on Tuesday did not like what we saw out of what was happening in the Middle East, the Iran-Israeli conflict. If you want to share my screen, Justin, what you'll notice is a couple of things. The S&P pulling back, kind of stopping exactly at the close from Friday. Pretty interesting place to stop above the 21-day. It's kind of in like a wait and see mode, if you will. But as the day dragged on, I want to tighten this up to a 1-day. Things got worse and worse. Now, I want you to pay attention to, the period in between 12 and 12:35. All right. And then what happened after 12:40. All right. And now I'm going to show you what was driving that. That, my friends, is when oil started to take off. Oil is your best gauge for what the temperature is in the conflict. Today's action in oil clearly points toward the temperature heating up. All right. And you can see that leadership in oil, and it pulled VIX with it. Now, normally VIX movement is going to lead the market. It did not today. Why? VIX is also reacting to oil. But the lone bright spot, those of you thinking about buying a house, rates came down today. We actually saw a pretty consistent rally in the bond market almost all day. We need the bond market to hold here, all right, and preferably rally a little bit. I would imagine if things cool off, bonds will cool off a little bit as well. We want to get some padding built into there because we don't want to be on the wrong side of a 4.5 yield in the 10-year and a 5% yield in the 30-year. That was where we would run into problems. Now, I want to talk real briefly about what might be an interesting opportunity. Oil options are incredibly expensive. And what I want you to notice is even relative to how much, so the red line is 30-day implied volatility or 30-day option prices. The green line is how much options cost at 90 days. And then these two lines are telling us movement. The purple is how much we've moved over the last 10. Light blue, how much we've moved over the last 20. And what I want you to notice is for how much we're moving, we're not getting anywhere near how expensive options are. It's a different story. And this is where looking for opportunity, looking at option flows, things you're going to learn about today, are going to make a big difference. You get kind of a different story out of XLE, which is the ETF for energy names. The vol is high, but it's only 30%. It's not 65%. And the spread between XLE and movement is a lot tighter. So if oil is going to go higher, we know energy is going to move higher. Oil drops, energy is going to drop. This is an opportunity. These are the type of things we're always looking for here at Option Pit, and the type of opportunity that you're going to learn about today, because Andrew and Hannah are going to be walking through professional approaches to how a professional trader, now retail trader, uses option flows, the understanding of movement in option prices, the things I was just showing you, to develop a trading strategy. And it's a pretty darn good trading strategy. I think you guys are going to be, you guys are going to learn a lot. So we've got a lot more people here. Where, I see we've got people coming in from Houston. Where's everybody dialing in from? Are you in Boston? Are you in New Braunfels? Are you in Santa Fe? Or are you in Seattle? And we've got V is from Detroit. Joe's from Ann Arbor, a couple of Michigan guys. Carol's in from Virginia. Virginia's for lovers, for those of you that didn't know. We got more Michigan. We got some Ithaca. Got a lot of Michigan representation. Love those people. I was actually just in Detroit a week ago. So went to the Tigers-Cubs game. Unfortunately, the Cubs lost. But yeah, a lot of people from all over the country and all over the world. Good to see you guys. We're very excited to have you here. And again, if you either get open your Google Doc and get ready to start taking notes on your computer, or get out a paper and pen right now, because there's going to be a lot that you're going to want to write down. I'm going to encourage you, when Andrew and Hannah get here, turn off Facebook, turn off the other distractions, and try and lock in here, because Andrew's going to be dropping some knowledge bombs. And that's one of the things that's so great about Hannah as your advocate, is she is so excellent at extracting Andrew knowledge bombs in a way that's understandable to, a person like Hannah that didn't wear a trading jacket for 20 years. And so be prepared to learn a bunch. All right. It is 7:03. I know that Hannah and Andrew will be here momentarily, so get yourself ready. And be prepared to learn. Just kind of briefly updating you on where we are overnight, for those of you interested in that. Since the close, oil ran higher and then has since pulled back, but energy is higher. And then, unshockingly, you have S&P futures down. We're down about 18 points. And with that, VIX futures are getting a big boost. Now, something to be aware of is that tomorrow morning is VIX expiration, so there could be some funkiness there as well. Speaking of funky and notably awesome, why don't we have our own Director of New Product Development, Hannah J. Sellner, join me here, and then we'll rope in Andrew here in a second. Hannah, I was explaining to everybody you're muted. I was explaining to everybody what CRT was.
Sorry.
And
Can you hear me okay now?
Yes, you sound great.
Thank you. Thank you so much. It was looking a few minutes ago like there was going to be a tornado here in Denver, but in classic Denver fashion, it's totally sunny and fine outside now. So,
well, there we go. I'm glad
just another evening. Thank you guys for being here. Hello, welcome. I know you guys have stuff to do, so we appreciate you taking some time to be here with us tonight. We are going to make it worth your while. Talking about option fingerprints is one of the most exciting things, in my opinion, because a lot of people love to talk about what they think are going to be top stocks in the market. And not a lot of people actually know. But what we're going to show you tonight is Andrew has designed a way to actually track which stocks today that are undervalued will be the top stocks in the market in 6 months, a year, 18 months. And we have some proof for you tonight. And we're going to show you how he does it. So Mark's yelling at his kids right now as he leans out of the
wasn't yelling. I was
gently raising his voice.
I was gently instructing them to stop.
Gently raising
fighting.
His voice. So. I'm sure we have some parents in the room who can relate. Mark, thank you for the intro.
Absolutely.
I appreciate it as always.
Yes. And now, Hannah, I will leave Andrew in your care. I know you're going to be doing a lot of explaining, and translating for everybody. And folks, like I said, shut off that social media, get that Google Doc open, or get your pen and paper right now, because Hannah and Andrew are about to dig in to the meat of the bones, and you're about to learn a lot. So with that, I will bid everybody a good night and hand you off to Hannah.
Thank you, Mark. Appreciate it. Andrew, if you are waiting in the wings, you are welcome to join me.
I'm here.
There he is. Hello, welcome.
I'm here.
I like this background for us. It's like it's raining on us a little bit.
I have the poofy hair going because of the humidity in Maine. So
That's okay. Me too. That's why it's up in this clip. I see some new names in the chat here tonight. If you are new, please say hello and introduce yourself. Andrew and I are going to do some super brief introductions, and then we'll get into this. Tonight will probably last around 30 to 40 minutes. We are going to give you guys a free long-term stock pick here tonight. So get excited. You're already going to get something just for showing up and being here. So, Andrew, I'll do my intro first and then I'll have you follow. Mark did this a little bit earlier, but my name's Hannah Sellner. I'm the Director of Product Development here at Option Pit. What that means for you is every trading strategy that we use is not only created by a pro trader, which Andrew was for many years, and actually trained a lot of traders how to trade. But I am basically I'm your advocate, like Mark said, and every trading product that we come up with has to go through a translator. I'm a translator. Every trading product that we build has to go through a testing process in order to be an approved strategy that we reveal to you guys. And one of those you're going to see here tonight. So that's my role. Andrew, go ahead and introduce yourself and I'll pull up the slides and we can get going.
Yep. I'm the Director of Education here now at optionpit.com. Been trading options since 1989. Almost 5 decades, 80s, 90s, 2000s, 2010s, 2020s. Oh my God. 5 decades. Freaking out. Anyway, as Hannah said, a member of the CBO Coast for a long time, owned my own trading firm for a while, retired from trading in 2006. And I met Mark after doing a couple startups about 4 years later. I met him at an event at the street, and I'm like, wait a minute, what are you doing here? And he had left Group 1, and I had run the training program at Group 1, and he was actually one of my students below me actually trained Mark. And because I had been there about 15 years before him when I started. So anyway, it was a long iteration of teaching people how to trade options. So back then it was teaching people how to trade, teaching our employees, our new guys, basically how to be floor traders. And then the transition from there to retail trading, using whatever market maker tricks we learned, and we learned a bunch, to teach retail traders how to think like professional traders. And that's what today is about: how to use some techniques, how to use market pricing, how to use information for us to make better trades. And Hannah is she's like, Andrew, you have to do that in a way that people can understand it. So Hannah is our translator in chief, I would say, at optionpit.com.
At the end of the day, we are here to help you make smarter trades and pull money out of the market. So tonight we're going to show you a strategy that has done just that and has a unique opportunity this week where you can join us in some new trades with some big upside. So let's get moving. This is our general option pit disclosure. We always show this. This basically says that the information we're going to show you is what Andrew does as a trader and what we do as traders here at Option Pit. Any decisions you make based off of this is your own decision making. I have a question for you guys, and I'm going to ask it, and you'll see right over here to the side is the chat, so you can put your answer. What do these 4 people have in common? Warren Buffett, George Soros, Peter Lynch, and John Templeton. If you don't know maybe Peter Lynch or John Templeton, you should probably know the first 2, or at least the first one. What do all those people have in common besides probably being on posters in Andrew's bedroom as a child? His idols. A lot of people put up posters of like Michael Jordan or Babe Ruth, but Andrew had posters. I'm just making this up. These people, and probably a couple more, are some of the best investors and stock pickers of all time. 100%. Now, Andrew, you picked this list and this group of people, and you and I had a conversation today, and you said that of all the investors ever, you can really count the top ones on one hand.
Right.
And each of them have a different edge that made them a great investor, a great stock picker.
Right.
But there's a problem. What's the problem with this list?
The problem is that I doubt anybody's going to be on this list by the time they die at this point. Maybe if you are on this list, if you become one of these four, I hope that you remember me and I helped contribute to the largest that you become. I'm going to say I'm not going to be on this list, top 4 of all time. But I still want, and what anybody wants, they want to grow their wealth. They want to invest in stocks and buy undervalued stocks right now that will become the market's top stocks. Like that's the dream, right? That's what we want to do. So if you're a trader, this is probably where your interest started, right? I want a stock. I think that's the fundamental beginning point. I want to find a great stock. So if you're not going to be the next Warren Buffett, like I said, it is unlikely, as much as I want it to happen, that a 5th on the list will come from this room tonight. What are you supposed to do? Like, okay, how can I use information? So today what I'm going to do is teach you about finding undervalued stocks with significant upside. And I'm going to do it by leveraging my experience as a professional trader, looking at order flow. Something that Mark does well, Alicia does well, Hans does well. And the reason why is because just the order flow kind of washed over us for years and years and years. You get hit in the head with the same stick, you learn stuff. So the strategy I'm going to show you is the one I've been using for well over a decade. My own personal trading, I do all my own trades. So anything that goes out by me, I do the exact same trade that all my students do. So I'm going to tell you what I know and how to use options to find the next great stocks. So Hannah, I think
that is an idea that may be new to some of you here tonight, and we're going to unpack that and show you some evidence. When we say use options to find a great stock, we're going to show you what that actually means. Before we do that, Andrew's going to take 2 minutes to kind of set the stage for you guys, because right now is an important time for using options to find the next greatest stocks. And it's an important time really for one reason, and that is the continuation of the popularization and mass adoption of AI. Now, Andrew's going to do the YMCA for you in a second. Just get ready. There really are 3 tiers of AI as you've identified them, Andrew. So let's walk through these. You said that, and we'll just take 2 minutes and do this. You said that tier 1 AI stocks, those are the first movers. So when somebody thinks of that, they should think like NVIDIA, Microsoft. These are the big boys, right?
Correct.
Yep. Okay. And then walk me through what tier 2 and tier 3 mean, because most people, if you watch the news, if you watch even just trading volume, a lot of people are still going after the tier 1 AI stocks.
Right.
But tonight, we're going to talk a little bit about how we can find stocks in tier 2 and tier 3 that are undervalued,
right,
cheaper, and have more upside and more room to run than maybe the stocks that are in tier 1. So let's walk through tier 2 and tier 3.
So the easiest way to think about tier 1 is like they're the railways and the engines. They've all built the basic AI infrastructure, and they're also gigantic.
Right.
Multiple $1 trillion market caps for basically all of them. So what I want to do is I want to find stocks that were like the towns that sprung up on the railroads, like Vegas, right? Vegas started 10 people, now bigger, right? You want to get on the Vegas ground floor and ride that up. So what I would say, infrastructure are all of the peripheral things that have to support the AI infrastructure. The energy needs are so big that, and you've probably heard it here at Option Pit several times, but the first movers are contracting directly with energy companies to guarantee power.
Right.
First time I can't think of the last time I can't remember actually. I mean, been doing this for a while, where they're worried about not having enough energy.
Right.
So everything that goes into supporting that infrastructure is a huge growth area that doesn't really exist right now.
Yeah.
So, you have to think about it. You have to think about stocks a little differently. Like utility companies are not exactly just utility companies anymore.
Mhm.
And then the tier 3 is what I would call stocks that have existing businesses that will benefit. So they're not necessarily servicing the AI like a connectivity company or an energy company would, but
Okay.
they have a business that is going to be suited
Sure.
to the emerging AI infrastructure. And
Sure.
those are basically where I've kind of laid out the three, just like social media came from the internet. Without the internet, there would be no social media.
Right.
And this is similar. Without AI, right, there is not going to be this new area of growth for a lot of these companies. So that's kind of where I see us at basically the halfway point of the year. As hard as it is to believe, we're at the halfway point. And
Right.
a lot of stocks, I mean, we're kind of sort of flat for the year. There's been a lot of action. If you got in there and you nibbled on stocks, again, we wrote about that kind of thing when the market was falling apart, you did well. But the major indexes are all kind of flattish for the year, but the
Sure.
AI press is still going on, and that's what we want to grab. We want to grab that
Okay.
press
Yeah.
for the second half of the year.
Right. So we don't want the AI stocks that are everyone's already on the bandwagon. We're looking for some energy supply chain companies, and then also some companies that are just positioned right place, right time to benefit from the proliferation of AI. And today, for everyone here, we're going to look at what a couple of these companies are.
Right.
And we're going to show you the reason why we know that in at least the next 6 months, these stocks have the potential to double. And it is by looking at the options on those stocks, which we're going to get into in just a second here. So by the end of today, here's what you're going to walk away with. You're going to know how Andrew tracks and trades option fingerprints. When we talk about looking at the options and how it tells us how a stock should perform, we call those option fingerprints. Think about a fingerprint you'd leave at the scene of a crime. It's kind of the same. You can see when people are scooping up these stocks. And we're going to show you tonight where to look. We're going to show you guys specifically 5 undervalued names, several of which fall in the tier 2 and tier 3 of the AI movement that Andrew was just pointing out. And as I said a little earlier, at the end, we're actually going to give you guys one company that you could buy today that we believe has 2 times upside on the stock. So that means if it's $100 now, it could go to 200. 200, it could go to 400 in the next year. So this is actually one of the stocks that Andrew is going to be trading in the paid service Flash 5. We're going to give you one of them away today. So, Andrew, the biggest hiccup to growing wealth with stocks is time.
Yep.
These 3 stocks listed here, Apple, American Express, and Coca-Cola. Warren Buffett bought all of these. But here's the problem. It took 9 years for Apple stock to go from $20 to over $200. American Express, it took 56 years. He was investing in it back in the 60s to go from $4 to $2.92. And 17 years for Coca-Cola to go from $3 to $70. Not everyone has the time to wait that long, and not everyone wants to wait that long. You really have to leave your money sitting for a long time. So one of the focuses that Andrew has when he's looking for option fingerprints is to try to find large amounts of movement in a shorter period of time.
Yep.
So let's show you how this has been working so far. If you're like, hey, this all sounds great, show me the receipts. Let's look at some of the receipts. Last year, Andrew picked 10 stocks using the same strategy you're going to see here tonight, using option fingerprints. The list of them is on the far left-hand side of your screen. So you can see Chewy, Robinhood's in there, SoFi, XYZ at the bottom that used to be called Square, PayPal, and Zoom. Now, the prices listed right there are the prices that these stocks were at last year. Let's see how they're doing a year later. These are actual stocks that Andrew found option fingerprints on, talked to traders and investors that were Flash 5 members about buying them. So, Warren Buffett was taking 9 years, 56 years, 17 years for some of these moves. Let's see where these are at less than a year later. 67% move. This is in
Not
the
bad.
stock, by the way. So that's 29 to a high around $48, almost $49 at 67%. The stocks that Andrew is able to track and the movement that he's able to find through option fingerprints is significant. Throw a yes in the chat if you guys are following me. What I want you to understand is you don't need to wait 56 years for a great stock to have big movement. You don't need to wait 18 years for Coca-Cola to go up hundreds of dollars. There are big stock moves out there, and you can find them. And we are going to show you how we find them because Andrew's already doing that. These were from last year, and these are the types of price moves possible. Robinhood's gone up over 238%. That's the stock from where it was when we identified it and where it's at now. By the way, these are not cherry picked. These are all 10 of the picks we gave out. All 10. So there is one in there, INTC, that's only gone up 4%. That's going to happen. But these are all of the picks. This is not cherry picked. The best part, though, I haven't even gotten to the best part. The best part is Andrew doesn't just buy the stock. He also uses options to make more money in less time. So those same 10 stocks, Andrew, you also played options on them. So let's look at the results of those. First column, you can see what the option price was last year when Andrew bought the options. And then you can see what the price is at now. The ones that are blank are still open trades. Those are still open. So we don't have the current option price. We don't have the current percentage. But you can see that there is triple digit potential when you use the option. So in addition to very significant stock moves, some stock moves that were close to 100% themselves, there's also additional money that you can make trading options. Now, these are directional trades. So this is not a spread, calendar, reverse, flip, switch, nothing complicated. Level 1 options. These are directional. So these are all calls that Andrew bought here. And you can see the prices. So let's take WBD, for example. It was $1.34 last year. The option price was. That's just $134 if you just wanted to buy one option. So these are affordable.
Right.
Andrew, let's get into, so here's the proof. We're showing you this works. Let's talk about option fingerprints because that's what you use to actually find these 10 stocks. And that's what you use to bring you to the 5 new stocks that you're going to be adding. You added a couple last week and you're adding a few more this Friday. So let's talk through what the heck is an option fingerprint and what do I look for? And if you have a piece of paper, this is the slide you want to write some stuff down on. So let's go through this, Andrew.
So I guess the easiest way to think of this is just you want to see interest. So the most important thing is open interest on in the money calls. And open interest is just when a customer has a transaction, you buy a call, liquidity provider sells it to you, it generates open interest out of thin air. You buy it, they sell it to you, boom, it happens. It's not like buying a stock where the stock has to be issued in the primary market. Totally different thing. So open interest can just keep happening and happening and happening and happening. So all of the institutions, so what happens though with open interest, which is interesting, is if they buy something and they don't close it, it stays open. That's why they call it open interest. So what happens is you have accumulation of institutions like big banks, hedge funds, that buy options, but they don't close them, right? That's the thing. They buy them, but they don't close them, right? And that's what we call option fingerprints. So the more accumulation you see and the bigger the numbers get, the more you see institutional interest. And by the way, no stock goes up without some kind of institutional interest, because that's where all the money is. Retail can move things around in some stocks, which is fine, but institutional money is really what pushes them up. Then another thing is like what I like to see is I like the fundamental story. Again, as an investor, you want the fundamental story. I like an earnings turnaround story where they have all of a sudden they go from underperforming earnings to 2 to 3 good earnings reports. Right. All of a sudden, things are just kind of getting more positive. And you can see that usually by pops on the stock, how the market reacts. It's pretty clear. And then the last thing you like to see is you want to see some interest in the options. There's nothing like money buying calls, right? That at once were out of the money and now are in the money and they don't sell them. So they're scooping up options, driving option prices a little higher. Stock gets a short-term boost, but then they stay in those options and then they become high open interest down the road. So these are all the things I like to see when I'm looking for options or looking the fingerprint of the options. But as a liquidity provider, I was also on the other side of all this paper. So as I would sell options, many moons ago, like I sell these options and then I look a year later and like, oh my gosh, they're like $30 higher than when I sold them.
So you've literally seen firsthand what scooping up huge orders of future dated options, what the effect that can have on the stock price.
And that's where the light bulb went off. I'm like, somebody's making some money doing this.
Right. So for those of you that are here that may be new to trading options, I just want to distill that down for you in 10 seconds. A lot of people think that stock prices go up just because a lot of people have theories why they go up. What Andrew, and a lot of them are wrong. So listen to pro traders like Andrew, because he's seen both sides of the court. He knows what's going on here. But what Andrew's saying is a stock does not go from $10 to $100 without its option fingerprint going up. Now, sometimes it'll go up 10 times. Sometimes it'll go up 200 times. Sometimes it'll go up thousands of times, which we're going to show you in just a second here.
Right.
But that has to happen in order for a stock to go from 10 to 100 or from 100 to 1,000. It has to happen. Never in history, and Andrew, correct me if I'm wrong.
Option traded history, right?
Never in options history. Thank you for keeping me honest. Never in options history has a stock gone from 10 to 100 without its option fingerprint increasing. Is that true?
Yeah, because the institutions have to acquire. That's how it goes up. Somebody's got to buy it.
Exactly. So if you're looking for your treasure map, if you're looking for your roadmap, if you're trying to figure out, okay, which stocks right now are going to be huge in a year, in 2 years, this is how you do it, because this has to happen in order for the price to do that. So let's look at an example, and we're going to give you the mother of all examples. Let's rewind 3 years. And I'm going to walk through this example with you guys. We're going to look at NVIDIA. So let's check what NVIDIA's option fingerprint looked like back in October of 2022. So let me explain what you're seeing on your screen right now. This is telling you, so see that yellow box? That's the options that are being bought, the total number, okay? If you add that up, that's the total option fingerprint. Now, each of these lines, 6, 63, 1, 19, 23, those are people buying different strikes, okay? So if you look at the 6 one at the top, those are 6 options being bought that think that NVIDIA will go over $35 by January 2025. So this person is basically taking a 3-year bet. In 3 years, NVIDIA will be over this price, okay? That's what they're saying. Now, this is a very small option fingerprint. We're going to show you a bunch of option fingerprints tonight, so you'll get a sense for what a large one looks like. This is pretty small. And not surprising, NVIDIA was only trading around $120 at this point. Now, this was pre-stock split, okay? So for those of you that don't know that, a year ago, NVIDIA had a stock split. So right now it trades like around, I think, a little over $100, right, Andrew? Right. I think it's a little over 100. But right before it did that split, it was going all the way up to 1,000. So let's just look at the growth. All right. This is October 22. Fast forward April 23. That option fingerprint went from 238 to 13,820. That's a 5,706% increase. Okay. In the same time that the option fingerprint went up that much, NVIDIA stock went from 120 to 264. So just log that in your brain. Option fingerprint goes up, stock price goes up. Let's look at a year later. The option fingerprint is 162,000. That's a 68,151% increase from 2 years before this. And look what happened to the stock price. It's all the way up over 1,000. So that's an $800 move between April 2023 and September 2024.
Totally nuts.
And the option fingerprint told you that this was going to happen. It told you. And Andrew has some parameters when it comes to how much he wants that option fingerprint to grow. And we're going to show you that. Let's look at one more example here. This is one that you actually traded, Andrew. This is Robinhood.
Yep.
I'm going to have you walk through this one. This is back from August 2024. Let's look at the option fingerprint and the price.
Yeah, I mean, back then, again, hard to believe, but this wasn't very long ago. The stock was 1642. The stock was starting to move. It's always been kind of a darling because of Bitcoin and crypto. But
Sure.
Stock at 16, you had the fingerprint at like 93,000 contracts. It's significant. Like you want to see a good number. Now, all of a sudden, the stock, I want to say doubles in price. But let's say it's a solid 50%, 60, 70%. Option fingerprint, though, now 182,000. So again, you're huge interest now in these options as institutions. Remember, they don't sell them. That's the thing. Like they ain't selling. They're expecting higher. So they're staying in.
Right.
And then we go to June 2025. The stock is now $73. I still own shares of it. But now again, we had like another doubling basically of footprint. So there now this is now an institutional name, widely held. And would it surprise me if a hood is $100 this year? No, not at all. Because it's growing like crazy. Who would have thought that hood would actually be able to produce the actual revenue growth they did? But hey, they did because a whole class of investors basically trust them. And they are gathering assets like crazy. They're gathering assets and they're beating Schwab and other things. So that's the fundamental story behind Hood as they branch out as a financial services company. But again, their initial idea was, okay, we're going to just do brokerage for free, right? Change the whole industry.
And Andrew, I know that you still look at the fundamental and the technicals on these names because you're a trader and you can't help yourself. But really, at the end of the day, the option fingerprint is your leading indicator. So because
when it's growing like this, yes, it's certainly a reason to stay in the stocks for the long haul as well.
Right. Because you know that a stock can't go, like I said, from 10 to 100 without an option fingerprint increase like this. So
without
you have to have this. Yeah. Right. So right now, Andrew, so we just showed you guys some examples. Do you have any questions right now? Put them in the chat if you do. We have about 10 to 15 minutes left of content. If you have a question, put it in the chat. We'll answer it for you. Give me a yes. Say, Hannah, I get it. Throw me an option fingerprint if you're tracking with us. You guys getting this so far? Option fingerprints basically predate the stock price spike. So one thing that is happening right now that's really important, and I see the questions, keep putting them in there. I'll answer them. One thing that's really important right now, and Andrew, we're going to get into this in detail in just 1 minute. When option fingerprints increase, sometimes it takes a little time for the stock price to go up or for the options to get more expensive. There's a little lag, I'll call it. Okay.
Right.
So as the option fingerprint might be going up, it's gone up 2 times. It's gone up 3 times. It's gone up. The stock price might still be hanging around the same level.
Right.
Now that doesn't last, and it doesn't last very long So what we're going to show you right now is that there are 5 undervalued stocks that are attracting significant option fingerprints, okay? In the last 6 months, their option fingerprints have grown. Some of them 2 times, some of them 3 times, some of them 6 times. One of them has grown 12 times in the last 6 months. So these option fingerprints are growing, but the stock price has not spiked up yet. So we have a tight window, a limited time where you can get in and buy both these stocks and these options before
Right.
their price reflects the interest in the option fingerprint. So that's why the heck we're here. And that's why I'm so glad that you guys are here, because this is important and it's very timely. In a month, these might have run away from us. That's why we're talking about it today. So I see the questions. Keep them coming. I'm going to get to them. Last Friday, Andrew set up his first 2 stock and option positions. So like I said, he has 5 undervalued companies with big option fingerprints. Last Friday, he bought his first 2 positions. We're transparent here. We don't front run. I'm going to tell you. Okay. He bought some stock and option positions. Now, the good news for you here tonight is you're not late. You're not late to the party.
Right.
So this is just a brief line on each of the positions he added last Friday. What his entry prices were. This is for the options and what the targets are. Now, right now, Andrew and I looked at these positions today. The first one is about 30 cents higher, so it's gone up a little bit. And the second one is exactly the same. So if you said today, Andrew, yes, I want to join Flash 5, you can still get into these positions.
Yep.
These have not gone up $3, $4. They're not out of your range. So you can
Right.
still get into these. And this Friday, June 20th, Andrew is going to set up his next 3 positions. So like I said, he has 5 total companies. 2 he's already put on the trades, and 3 of them he's adding this Friday. So Andrew, take me through this a little bit. Let's start to give people some shape for what these trades actually look like.
Okay. So again, I want the option cost to be average around $2. I don't want to try to spend a ton of money on the options, although they are a longer term option. But again, the first 2 cost $4.25 and $2.65. So I'm shooting for a $2 option cost. Why? It's a lot easier for a $2 option to double a $6, $10, or $25 option to double.
Right.
Also, the projected hold time is 3 to 9 months. That's another thing. Okay, all the greats, what did? They hold. They held things. You have to be able to hold this. We aren't holding them for years, but the time is 3 to 9 months. And that's important to try to get the lift we want in the stocks. As you saw what Hannah showed you earlier from before, having that time period, produced a lot of great equity returns. So keep that in mind when you're trading. This is not like you're buying it today and you're going to sell tomorrow. But on the same flip side, you don't really have to do very much. You just kind of buy them.
Right.
And you just hold. The target for each stock is 1.5 to 2 times. So I'm essentially looking for a double in each of these stocks. That's the goal. And the way the options are priced, that's what I see as a reasonable exit. But again, we saw from the list that Hannah gave you, we had variation from 4% to 225%.
Right.
Also, the target for the option, though, this is kind of the fun part, where you buy an option instead of the stock. Where now I'm looking for 3x on the option. So remember, the whole point of buying options, instead of spending $15,000 on 100 shares, you spend $200 on one option that has essentially equivalent power. So the idea of options is to use the fact that you're going to buy one call instead of spending $15,000 on the stock, and get much more leverage for your dollar, right? You're essentially, the option is acting like the stock. So that is our target for each option. I want to find an option that will give me at least 3x if I hit my dollar target in the stock.
Right. Couple questions from the chat I'm going to address really quick. Number one, this is not pre-recorded months ago. NVIDIA had a stock split. So they basically went from $1,000 down to $100. So that's why that example looks a little different.
Right.
It was a stock split. We don't actually, AECH asks, are you buying LEAP options with the option fingerprints? Sometimes we do, but most often not. Andrew is just using those to actually see where the interest is. And we're going to show you an example of that in just a second here. So I want you guys to remember a couple things. We're going to go through these exact examples. So when I say Andrew has 5 stocks right now, undervalued, big option fingerprints, we're going to show you the option fingerprints. So remember, here's what we're looking for. We're looking for in the money options bought on a January to January cycle. And what that means is in every example we show you today, the options that we're looking at and tracking the option fingerprint are going to be options for January 2026. And Andrew will get into this more if you become a member of Flash 5. But basically what it means is when you look for how institutions buy options, they're going to predominantly buy them on that cycle. So if I'm trying to look over a whole year when an institution is buying the most amount of options, that's where I want to look. So that's why we look at that.
Right.
That's why you're going to see January 2026 on a lot of these. Okay. We want to see those options bought and we want to see them held, even when companies are up 2 times, 3 times, 4 times. It's like having a great hand and I'm just sitting here waiting.
Right.
They're not cashing it in. And they're not cashing it in because they think it has more upside potential.
Yep.
So let's actually look at the interest growing in these 5 stocks. Let's start with the first one. Now, there's some stuff blacked out on this chart. We're not going to give you the name of all of these. We're going to give you one of them. Not going to give you the name of all of these. So let's look at this first one. Andrew, at the beginning of this year, the option fingerprint, which I saw you guys chatting about this, right now, the way we're calculating the option fingerprint is the summary of all those options right there. So if you see that yellow box, if you add those up, it's about 24,000. So that was the options interest in this stock at the beginning of this year. Let's look at now. 128,000. So this has gone
one
up.
of the more surprising ones.
This has gone up significantly. And the current price of this stock, just to give you some perspective, is $65. So that's where this stock is starting, this particular example. So that's just the first one. That's stock 1. Let's look at stock 2. Beginning of this year, 42,000 is our total option fingerprint. Now it's 53. So this has gone up a little less, but this is a cheaper stock. This stock right now is only 6. Oh, you can actually see what it is. So I'm going to skip it. I forgot to blur out on that one. You could see what it was. If you were fast to a screenshot, congratulations. You got one for free. But that was a $6 stock. And some of the stocks that you'll find on here, Andrew, they are cheaper.
Right.
So if you want to go scoop up 100 shares of stock, you can do that. And it's not going to cost you $6,000 or $16,000.
Right.
It's a bit smaller. Let's look at this one. Stock 3. Andrew, can you give us a little info? So I want you to explain in your own words why you look at specifically the January 2026 options, because you've seen these orders from the other side of the table.
Right.
So why do we look at that versus like 2027 or May of 2026? Like, why that specifically?
Well, one of the reasons too is, institutions, they don't want to be bothered with a lot of transaction costs. They want to make things simpler. Why did they invent quarterly options? The same reason why they like leaps. Okay, I'm going to buy the stock for a year. I'm going to buy the stock for 2 years and hold it. So for them, they're the ones that requested long-term options in the first place. Like, okay, we would like to have long-term options so we could buy them and not think about them anymore.
Right.
And from history, I've seen, wow, that actually works pretty good. So, so what you want to see is, like Hannah said, more in the money calls. Those are calls below where the stock price is, where that open interest is not necessarily turning over. Exception being if they roll up, they sell what they own and then they buy a strike higher and they buy more. So they sell like 1,000 calls and then they buy 2,000. That could be an exception to that. Where basically they want twice the exposure. They're going from essentially 1,000, 100,000 share exposure to a 200,000 share exposure. and taking money off the table, and then try to get a real boom on the upside. So, so the idea is, but they're already sitting on significant dollars because the stock has lifted, gone up a bunch, and the fact that they're not selling them and keeping that open interest. Again, they want to ride it to the end of the year, which for us, that's what we're looking for, right? We're halfway through the year. The market is essentially flat. Maybe some stocks are up a little bit, but for the most part, for all the action we've had this year, the market is remarkably flat going into the second half of the year, which I think is it's very important for investors at this point. The fact that you can get halfway through the year and still have these stocks at
Right.
really good prices, basically.
Right.
So essentially, this is how institutions work. They are buy and hold. That's why they're like Jan 2026, Jan 2027, and shortly Jan 2028 is starting to be listed, right? They are looking for the big number, right? Buying options instead of stock and getting those big returns. And that's how they invest. And I have to say, it's worked very well for them.
And for us. There is a seasonality to Andrew's option fingerprints. I'm going to talk a little bit about that more in just a second, but this is not something where he can go and find 5 of these at any time. It's not like every week there's 5 of these.
Right.
These are almost quarterly opportunities. He has additional criteria in it, like not just the option fingerprint that he's looking for. And we talked about this a little bit. There's a couple things you have to stack up here. You can't just go add up the option fingerprint of a stock and be like, oh, great, this is going to be a long-term one. There's a couple other things you have to do that Andrew teaches you when you join Flash 5. But if you think this is something that happens every week, I just want to make sure you understand that's not true. If anything, we release maybe 5 of these names or 10 of these names like quarterly. So if you don't get in on this round, it's probably not going to be till next fall or next winter that we have a new release. Back to stock 3. Beginning of this year, 7,000. Right now, 32,000. That's a big spike here. And this is a little more expensive stock here, $152. We are actually going to give you guys the name of this one. So if you're here for your freebie, here's your moment. This is Qualcomm. QCOM is the actual ticker for this one. This is a stock that last Friday, Andrew bought the stock and he also put on an option trade. So Andrew's already invested in Qualcomm, as are all the traders that are in Flash 5, which is a paid trading service with Andrew. But we wanted to give you guys a freebie for showing up. Thank you for being here. And if you want to go buy Qualcomm, you can certainly go do that. Andrew already did. So this is one of the picks. And if you do buy it, let's see where it goes. If you want to get the actual option trades, though, and the other stock trades, you have to join Flash 5. Let's look at another one. This is your 4th stock, Andrew. This one at the beginning of this year, the option fingerprint was 18,000. Now it's 47.
Yeah, this is one of my favorites. This one I think is going to be over $50 by the end of the year. So, and I also, this is one of my longest longs, you could say. In my, just because I think it's a good price performer. And the accumulation this year has been a little nuts. Finally, I'm glad that it's finally happened. So it makes me feel a little better about my long position. I might have front run this a little bit, but I have high hopes and expectations for this, because this is in one of the areas that I think AI will benefit the best.
If you guys want the strike and the expiration and all of the option details for either Qualcomm or the other stocks, you have to join Flash 5. We can't give those away to you. Else we wouldn't have a business and be able to build our strategies and serve you. That's something that is, you actually have to join the service in order to get. We gave you the stock name as a freebie, so you can go buy Qualcomm. But if you want the actual option trade, that's what you have to join Flash 5 for. And we're going to tell you how to do that in just a second. Let's look at the final name here. And this one is very exciting, Andrew. The option fingerprint started super small. This is very small, just
Yep.
1,000 at the beginning of this year. But this one has actually gone up 12 times.
Yeah.
So it's up to over 12,000 now. Now, I know you're tracking that to see if it goes up a little bit further, but you're looking to actually place a trade, buy the stock on this stock number 5 this Friday, correct?
This Friday. Yep.
Right.
And this
So-
is a surprise. I was surprised by how little interest there was at the beginning of the year on this one,
Mhm.
but the market caught up with it. At least buyers started to pile into it. So I expect this stock again to do great things. It would not surprise me if this stock was over $100 by the end of the year as well. So this is another one I think it could really fly for us. So
Carol
We'll,
just
uh,
asked, are these all AI stocks? Carol, you're connecting the dots for me. She threw me a softball. I'm going to hit it out of the park. We showed you guys those AI tiers at the beginning for a reason.
Right.
Several of the stocks that we just walked through and showed you, those are those tier 2 and tier 3 AI stocks.
Correct.
Meaning they're energy companies, they are AI supply chain companies, they are companies that are just positioned in the right place at the right time to benefit off of AI. And the institutions are already recognizing that by buying up these option fingerprints,
Right.
increasing the interest. And we want to piggyback on that. So that's what
Right.
Andrew's doing right now.
Right. And I think of a stock like Meta.
Mhm.
Meta, they don't even mention the metaverse anymore. You know what they mention? How AI is helping make their network more valuable. The metaverse doesn't exist anymore. The only that they mention is that AI is helping make make Meta itself and Facebook more valuable. So again, that's a hint on the way that once the market grabs onto the stock like this, and we see enough fingerprint and open interest in these names, that's when we want to have the wind just sort of fill up the sails on the way.
Little surprise for you guys. Flash 5, which was 5 stocks, is actually Flash 6. There's a bonus 6th stock that Andrew really likes that he will also probably be adding either this Friday or early next week.
Right.
So we're going to post an order form for you guys. If you, my tech wizards in the background, if you can actually post that now, because we've run a little long, let's post it now so people can see what we're offering to them. And Andrew and I are going to walk through the offer here
Yep.
with you guys. So Flash 5, which is actually Flash 6, like we said, is a paid service here at Option Pit. And I'm going to walk you through everything you get. So like we said, option fingerprints are happening around us. Andrew is actively tracking those. And about 3 weeks ago, he said to me, Hannah, I have a new Flash 5. I have 5 stocks that are undervalued, that have growing option fingerprints, and I'm going to put on stock and option trades for every single one.
Right.
So he did 2 of them last Friday. Like I said, you could still get into those. And he's doing the remaining 4 this Friday.
Right.
So when you join this and you become a member of Flash 5, you'll get all the entry prices, all the sell targets, and you can get those for both the stocks and the options. The trading plans for each. So Andrew will provide targets. So he says, okay, I'm going to buy this option at $1.20. I want it to go to $5.60. He'll
Right.
give you the exact target. So you never have to wonder, should I sell this? Should I keep it? But these are low maintenance, which is one thing we like about the Flash 5. You don't have to watch these. You don't have to actively day trade them. I know a lot of people that do this, put the positions on, and they wait. They may not even check it for a couple months. That's normal. These are supposed to be lower maintenance. Andrew has a watch list of some stocks that he's watching outside of the Flash 5 that he'll also provide to you when you join Flash 5. He's also going to send you trade alerts. So if he does sell one of these or it does hit a target, he'll send you an email and you can actually get a push notification straight to your cell phone that tells you that he's selling. So you can do the same. Look at your own option. Is it something you want to take your profits on? Those are sent straight to you. Andrew also is doing a live class this Friday. So in 3 days, Friday, June 20th at 12 noon, Andrew will actually put the next 4 positions on with you. So he has 4 more stocks. He's going to buy the stock and also buy option trades. And he'll give you the exact option that he's planning to buy. He's doing that this Friday. So it's this Friday, 3 days to actually get in those option picks. Now, we're going to show you in just a second, or if you've clicked the order form, you already see this. There's 2 options, okay? No pun intended. You can either just buy Flash 5 stocks. And if you do that, Andrew will give you the names of the 6 stocks. And I'll say, okay, I want you to go buy it at this. And here's the price target I'm looking to hit in X amount of time. You can just get the stocks if you want. Or you can get the stocks and the options. So the actual options, chains, etc. So there's 2 perks that are really only for the options people. So if you buy the options, you'll get the option alerts, the exact strike, the exact target, etc. You'll also get monthly live meetings with Andrew if you're an options member. So once a month, you guys are going to touch base. He's not going to leave you in the dark. Once a month, you'll touch base. You actually look at the trades. How's everything going? Are we still holding? Are we looking to sell this? He'll walk through everything once a month with you guys at those live meetings. So we made this beautiful side-by-side so you can see for the 2 options you have exactly the difference. Now, if you do the stocks, like we said, Andrew's looking for really a double there. So you get 6 stocks. He's looking for all of them to 1.5 to 2x over the next 3 to 9 months, maybe even a year for some of them. So you would get that portfolio, you'd get the buy and sell targets, and you can build those positions with Andrew this Friday. If you do the options version, you'll get all the stock stuff, but then you'll also get the portfolio of, and now it's actually 6 options trades, and those each have a 3-time target on them. So if I buy it for $1, I'm looking for it to go to $3. And he'll give you the exact strike for all of those options. You can see everything here side by side. So you know exactly what you're in for. Now, there's a button above Andrew in my head. It should be wiggling about. It's a gray button. If you click that, it'll take you to the order form. These are super affordable. This is super affordable. If you guys have been here for a while, you know that a lot of our subscriptions, they can cost thousands of dollars. It's because the knowledge you get from a pro trader is extremely valuable. But these are lower maintenance trades. So when you click on that, I think you're going to be pleasantly surprised by the price of these. It's very affordable. Now, if you guys have some questions, let's pop them over in the chat. Andrew, I'm going to feed a couple of these to you right now.
Okay.
CEB is asking, what kind of money will it take to invest in all 5?
Probably around, let's see, I don't know, 3, 2, 6, like $1,800. So the option trades themselves would be about $1,800 if you bought all of them. All right. I expect any one trade to pay for the entire cost of the service, at least, if not more. But again, this is important to allocate. Like, you should not be spending more than 1 to 2% of your account on any trade. So the way I think about this, if you're going to buy 100 shares of this stock, you'd buy the option instead. And that's how you want to think about the type of money you would need for the service.
Carol asked, the membership is for what duration? Carol, the membership is for the duration of the trades. So as long as Andrew is in the stock trades, as long as he's in the option trades, you will be in the service, meaning he'll be sending you updates. This doesn't mean that you get the Flash 5 every time. Although if you had this before and you want to buy again, please give us a call and we can work out a deal for you. But it's for the duration of the trade. So it may be 6 months, it may be 9 months, it may be a year.
Right.
Andrew will see all of these through with you.
Yes. And it's a buy and hold service. Buy and hold service.
Correct. Mike Anthony 91 asked a question about if you join just the stocks, can you upgrade to options? Mike, yes, you can.
Yes.
Give us a phone call. There's a number on your screen right now. You can see it right in the middle of that pretty package with everything you get in Flash 5, 888-872-3301. Give us a phone call. They'll hook you up with that upgrade. Slipknot is that monthly, quarterly, or annual. This is a one-time fee. These don't
Yep,
renew.
one-time.
This isn't monthly. It isn't quarterly. It isn't annual. It's a one-time fee. You pay this once, and that's it. That's it. So when you click on that, you're going to see that the stocks are $199. That's all you pay. That's it. $199 for 6 stock picks with the ability to 2x each of them. That's what you're getting. Carol, I just set the price. I just said it, sister. If you click here to join at the top, you can see the order form yourself too. The
Pops right up.
stocks are going to run you. If you just want the stocks, you're going to get. It's going to be $199. That's $199 for the 6 stock picks. If you do the options option, that's going to be $699 to actually get the option trades. Those are the prices. I'll be straight up with you. Click there right at the top. It'll take you to the order form. You can see everything right there.
Right.
Any more questions that we have? Pop them in the chat. Andrew, I just want to reiterate, you're putting these on in 3 days. And you talked about this earlier, but you put your own money in all of these positions. That's correct.
Yep, everything in option pit. So again, this is the biggest reason. One is we have had kind of a gift this year because we've had a lot of volatility in the market. And we've had a lot of volatility, but the AI story is now 6 months older. It is getting more mature. You can see how it's moving. You can see how institutional money is now piling in to more options on this. Anyway, the stocks that I thought weren't interesting, and the fact that their money is going into them makes it more interesting. But the best part is the volatility in the market actually helped us out, because the market essentially went up, went down, came back up, went nowhere. But institutions still accumulated options over the 6-month period. Now we actually get the chance to ride for this next 6 months, like the next half of the year. And I think that's why the second half of the year, it won't be, I don't think it'll be as volatile as the first, but it will be, I think, better for investors. Unless you scoop stocks, at the lows in April and early May. But I think we'll get I expect to get a lift in all of these names going up until the end of the year. And the biggest reason, of course, is that institutions, right? They weren't afraid to buy over the last 6 months. The whole reason when you see accumulating open interest is they're buying, and they're getting in. So now they want a payday. And that's what I want to ride for the next 6 months.
Andrew, thank you so much for being here tonight. I want to wrap it up. We said we'd keep it to an hour, so I'm going to keep it to an hour. Thank you guys for being here. At the top, you can still click and go to that order form. Friday is when Andrew will be putting on the next position, so I wouldn't wait beyond that. If you have, one of the great things also about joining a service like this, Andrew is going to over deliver when it comes to answering your questions. So if you have more questions like, okay, how do I actually track option fingerprints and find them on other stocks and do this myself? You're going to learn that. That's something he's going to teach you. So you're going to have access to more information like that when you join Flash 5. Again, if you have any questions, give us a phone call. The phone number is on your screen right now, 888-872-3301. Thank you guys so much for being here tonight. And thank you, Andrew. And
thank you, everybody. Hey, have a great evening. And thanks for coming.
Thanks, guys.
Bye-bye, everybody.